Okay, so what we're going to do today, and we're going to do this for the next 3 days. Actually, if we'd been in class, we would have also done this for 3 days in class, but probably more on your own than we're going to do it here. Is I'm going to go through and we're going to fill out a form, a standard form 1040 for a fictional family whom I have all the tax documents for, and we'll go through them. There are three types of 1040s. There's a 1040 EZ, and it's called that because it's very short, it's very easy. It's for people who don't have a lot of wealth. They might have an income, but not a lot of wealth. A 1040 standard form is a little bit longer, but it's one for families that have maybe a little bit more wealth, maybe have some debt. And then there is, 1040A is for those families. And then the 1040 standard form is for families with, a lot of wealth, a lot of different investments. I know Donald Trump's 1040 that he filed was like 20,000 pages. So they can get pretty lengthy. We're actually going to do a 1040A, not a 1040 standard. Now, you'll probably, I've seen this meme a lot on the internet. People say, well, we were taught calculus, but we were never taught how to do taxes in high school. Well, there's a good reason you weren't taught to do taxes in high school. Taxes are very individualized. The laws regarding taxes, not only are they specific to individuals and individual circumstances, they are also thick enough that they would fill every room in the high school. Even the gymnasiums from ceiling to ceiling or from floor to ceiling, wall to wall. And so there's lots of stuff to teach that I don't have time in a high school to go through. And people who are experts in this, they change the laws in this all the time. So they constantly have to be going to seminars and things to stay up on the new tax laws, how things are going to work. And so this is not something that, we can, here's how you do your taxes, because it's going to be different for each one of you, actually. And so when I teach this, I'm not necessarily going, okay, here's how you do your taxes. Now you're an expert. I'm teaching it, okay, here's how you go about doing your taxes, not what exactly is doing your taxes for all time. I'm giving you guidance on, okay, when you sit down 10 years from now with your little family and you go to do your taxes, here's how you would get to be able to do your taxes. Now you might just say, Mr. Klein, I'm going to pay someone to do my taxes. That's well and good. But you don't want to get ripped off. You should at least kind of know what goes into doing your taxes. When you prepare, when you plan for how much you're going to owe in taxes, you should at least understand, okay, here's what the laws are regarding that. And again, I'm not going to give you a full scope, but I'm going to show you where to find the information and what the form actually says. And to give you an idea about how these things changes. Last year's 1040A was 75 lines. This year, 22. So these things change over time as we go along. So what I have brought up here right now is the IRS 1040A instruction form for tax year 2019. 2019. And I don't normally print this off because it's about 200, 300 pages long. So we'll refer to it, but I'm not going to print it off. What we're going to do today is the 2019 Form 1040. And I'm going to bring up some information here on the family that we are doing this for. Go back here. Oops. In year 2019. Okay, so let me just go through the instructions for this assignment. Once you're graduated from high school, the completion of your annual federal income taxes is a trial all adults must face. This exercise is intended to give you a feel for what goes into calculating the amount owed the federal government each year in income taxes, what is required to make this calculation, and the work involved in reaching it. You have to complete the attached IRS Form 1040 as part of your assignment, as well as printing out and attaching any other requested forms according to the IRS Form 1040 instruction manual. The instruction manual for completing the IRS Form 1040 can be found at this address. Really all you have to do is go to www.irs.gov. They have a search bar, just type Form 1040 and it'll give you links to everything dealing with the 1040. If you want to print this out, I would not print the instruction manual. Again, like I said, it's over 200 pages long. Some additional notes. You'll need to complete any additional forms required in the Form 1040. Sorry, I went a little bit too far there. Any additional forms required in the Form 1040 instructions, and these forms can be found by searching the IRS website. You'll also need to know the following. Philip Jackson McDonald is the father, date of birth February 13th, 1979, and his social security number. His wife Mary, date of birth September 29th, 1980. Jackson Ronald McDonald, his date of birth is May 10th, 2002. Leonard Philip McDonald's date of birth March 1st, 2006, and Cheryl Lucille McDonald, date of birth March 24th, 2009. The attached tax reporting forms can be used to confirm income and allowable tax deductions. The McDonald's are not itemizing this year. Itemizing is something you would do on a standard Form 1040, and these are things the government allows you to list that you've done that you can take off of your taxes. So for example, if you installed a new Interstar compliant appliance, you can write a portion of that off your taxes. And there's thousands of things that you can itemize and list to say, okay, I can take this off my taxes. Most people don't, have a lot of that unless you have a lot of wealth. So, that's the reason they're not itemizing this year. So as you go through the instructions, it says if you are itemizing, you don't have to worry about it. All right, their mortgage was used to purchase their home. The entire McDonald family is covered under Philip's employer-sponsored health plan. And otherwise, if you don't see it, or I'm not telling you based on these directions, that information, it did not happen. So on some places, and I'll give you an example, are you an educator? It's going to ask on the tax form. Well, Philip McDonald is not. It's not shown here. He's not an educator. We're not going to worry about it. So if it's not here and on the instructions, it's not something we're going to worry about. Okay. And then, the other stuff would really have been if we're just in class, you would sign your name in the preparers section, and don't worry about the McDonald's signature, bank or refund information. You don't need to complete anything, but the preparer's signature after line 21A. And while I can help you in any way understanding the IRS directions as provided, this was supposed to be a self-learning exercise. You would follow the instructions in the booklet in class, and I would help you understand the instructions. Obviously, it's not going to work like that here. I'm going to actually go through it and show you how this tax return works. So let's get started here and close the instructions and go back to our 1040. Now, I told you we had some tax forms for the McDonald's. If you are working and getting a wage, you are going to receive a Form W-2 in the mail at the end of the year. And you may have gotten one if you work part-time for one of the various restaurants around town. A W-2 is a tax reporting form that's required by the U.S. government to be sent out by the end of January by anyone you earned income with by the previous year. Earned income is income you worked for. Now, what if you, either are an independent contractor, or you got money from interest, or you sold some stock and made some money, what we call capital gain? Then you would not get a W-2 for that money. You would get what we call a 1099 or a 1098. And so they're just like W-2s. And as we go through here, what you'll see is we have a couple of those forms as well. So to start with, we've got Philip McDonald's W-2 here. I can see in box E here, Philip J. McDonald, 321 South Street, Mackinac, Illinois. And he works for Smith & Jones Industries. And then I have his wife's W-2, Mary McDonald, works for Mary Maids of Peoria. And then I have a mortgage interest statement, which is a 1098 form for them. This is the interest they paid on their mortgage. They're allowed to deduct that. A deductible is something you can take off your taxes. And then I have a Form 1098E, which is interest that they paid on their educational loans. So their college loans they're paying on, you can deduct a portion of the interest. So I've got one for him, and I've got one for Mary as well. And then the final tax form they have this year is a 1099 INT for interest. And this is interest they earned on their bank account that they will have to pay taxes on. So they have to report that as income. So you'll notice 1098s are things we can deduct. 1099s are things that we have to add to our income. Okay, so let's get started with the McDonald's and go ahead and look at our tax form here. Okay, first thing on our tax form says filing status. Single, married filing jointly, married filing separately, head of household, or qualifying widower. Let me go through these real quick. If you file single, you're paying more taxes. You're in a higher tax bracket. The taxes are set up to kind of favor families and married couples. You know, families are considered kind of the backbone of society. And so tax laws are built to kind of favor families. So single, you would pay a higher tax rate. Married filing jointly means that both of you are adding your incomes together and you're filing as one household. Married filing separately means you're married to someone, but you're not filing taxes with them. You'd still pay the single rate pretty much. Head of household is for non-married people who have dependents, or parents who have adult children living in the home that they claim as dependents or things like that. It's a little bit higher tax bracket than married filing jointly, but it's a little bit less than single. And then finally, qualifying widower, or widow, that's someone whose spouse has died in the past tax year or beyond. So in this case, we know the McDonald's are all alive and are married, and they probably want lower taxes. So we are going to check the box married filing jointly there. Now we'll go down here at your first name and middle initial, and we'll go down here and look again at the tax documents that we have for the McDonald's. And we'll start with Philip J. McDonald, February 13th, 1979. So we're just going to put Philip J. McDonald. And what was his social security number here? Pretty easy to remember. 1, 2, 3, 4, 5, 6, 7, 8, 9. So go 1, 2, 3, 4, 5, 6, 7, 8, 9. And if a joint return, this is a joint return, we're going to do Mary now. So Mary, I don't remember her middle initial, so we're going to go back and look at this. Douglas McDonald. Mary D. McDonald. And her social security is 1, 2, 3, 4, 5, 6, 7, 9, 0. Okay, their home address. And we can find that on the W-2. So let's go up and look at his W-2 for their home address. And it's 321 South Street, Mackinac, Illinois. 62345. 2345. I already forgot it. The address was 321 South Street. Okay, no apartment number. We don't have to worry about that. No foreign country that they've lived in. That wasn't shown anywhere, so we can assume that's true. Presidential election campaign box. It says, check here if you or your spouse, if filing jointly, want $3 to go to this fund. Checking a box below will not change your tax or refund. In other words, they don't take the $3 from the refund, or they don't add $3 to your taxes. This comes from a special fund set aside that presidential candidates who get a certain percentage of support in the polls are given campaign election money. This is supposedly to help poorer people be able to afford to run for president. I don't know. But you can certainly check this for you, your spouse, if you want to donate $3 to the campaign fund. If more than 4 dependents, see instructions and check here. We don't have to worry about that. The McDonald's have 3 dependents. In other words, we've already filed taxes for Philip and Mary. So Mary is not Philip's dependent. Philip is not Mary's dependent because they're filing jointly. Dependents usually are children, people living in the household who are financially dependent upon you. So we'll go down here. It says standard deduction. Can someone claim you as a dependent, your spouse as a dependent? And we'll have to assume that was nowhere on there, that Philip and Mary are independent and therefore can't be claimed as a dependent. So we're not going to do any of this. The next box says spouse itemizes on a separate return, or you are a dual status alien. We're filing jointly, so we know she's not filing her own return. The dual status alien is someone who has citizenship and pays taxes in another country as well as the United States. We didn't see that anywhere, so we can ignore that. And then it says age and blindness. Were you born before January 2nd, 1955? And no, neither one of them were, and we didn't see any information that either one of them were blind. So we're not going to check any of those boxes. So now we get down to the dependents, and we're going to list the McDonald's children that lived with them for at least 6 months throughout the year. And you can verify that by going to the instructions here and and what's cool about these instructions is they are broken down line by line. So you can see on every line what they're asking. So if I go down and I look at, filing status, I can look at the different definitions, social security number, name, age, blindness, presidential election campaign fund, who qualifies as your dependent. Now you'll notice on the right-hand side of this, they have a little table here, step by step, to see if your child qualifies as a dependent. And if we follow this table, a qualifying child is a child who is your son, daughter, stepchild, foster child, brother, sister, stepbrother, stepsister, half-brother, half-sister, or a descendant of any of them, for example, your grandchild, niece, or nephew, and was under age 19 at the end of 2019 and younger than you or your spouse if filing jointly. Under age 24 at the end of 2019, a student defined later and younger than you or your spouse if filing jointly, or any age and permanently and totally disabled defined later, and who didn't provide over half of his or her own support for 2019, and who isn't filing a joint return for 2019, or is filing a joint return for 2019 only to claim a refund of withheld income tax or estimated tax paid, and who lived with you for more than half of 2019 if the child didn't live with you for the required time. See exception to time lived with you later. So you get the idea here. These are the requirements to be a dependent. And if we look at everybody's birth dates here, let's see, Jackson Ronald McDonald was born in 2002. That makes him 18, or going on 18. He's actually 17. Leonard Philip McDonald was born in 2006, and Cheryl Lucille McDonald was born in 2009. So everyone here meets the criteria to be listed as a dependent. So what I'm going to do is I'm going to go back to here, and I'm going to one more time look at, say we got Jackson R. McDonald, Leonard P. McDonald. So Jackson, Leonard, and Cheryl, and all of their last names are McDonald. And rather than typing that, I'm just going to copy it and paste it on each one. And now I'm going to go out and get their social security numbers. So Jackson's is 234567890. Leonard's is 234098765. And Cheryl's 234087654. 234087654. Okay, in relationship to you, meaning the person whose name is first on the tax return, so that would be Philip. So Jackson is a son, Leonard is a son, and Cheryl is a daughter. Now, number 4 says, does the child qualify for a child tax credit for other dependents? And so we're going to look at the form here to see what that means. What is that? How do we fill out that line for there, whether or not they are? So we'll go down to this table. Does your qualifying child qualify for the child tax credit or credit for other dependents? And we'll follow the steps here. Did the child have a social security number, adoption, taxpayer identification number? We just entered their social security numbers. So yes, now we'll continue to part 2. Was the child a U.S. citizen, U.S. national, or U.S. resident alien? Yes. So now we'll go to part 3. Was the child under age 17 at the end of 2019? And it was yes for all 3 of them. So now we're going to go to part 4 here. Did the child have a Social Security number valid for employment issued before the due date of your 2019 return? Yes. So now we can claim the child tax credit for this person. We're going to check the child tax credit box in column 4 of the dependent section. So we're going to go back here. All these kids meet that criteria, so we're going to check the box for each one of them. Now, what about the credit for other dependents? Well, let's go and look at this. Is your qualifying relative your dependent? Now, this is not child, so that's just if we have someone else who's not our child living with us. So we're going to skip that. Does your qualifying relative qualify you for the credit for other dependents? Did they have a Social Security number? Yes. Was your qualifying relative a U.S. citizen? Yes. You can claim the credit for other dependents for this dependent. Check the credit for other dependents box in column 4 of the dependent section for this person. But notice it says at the top, does your qualifying relative qualify you for the credit? It doesn't say child. So we're going to have to go over here and say, okay, what exactly do we mean by a qualifying relative? And that's where the part we skipped over, isn't it? Because it didn't say that. So a qualifying relative is a person who's your son, daughter, descendant of brother, sister, father, mother, stepbrother, any person other than your spouse, and who wasn't a qualifying child. Okay, so this doesn't qualify them, so we don't need now to check that box over there. We've done everything we need to do on line 4 here. Now, that's just the very top of the return, so that's the basic information. Now you'll see that we're down to line 1 here, wages, salaries, tips, etc. And so this is where we start entering money and math. So if we go back to the instructions and we look at the instructions for line 1, so let's get past all this. Income. Foreign and stuff. We don't have to worry about foreign chapter. We didn't declare bankruptcy. Rounding off to whole dollars. You can round off cents to whole dollars on your return and schedules. If you do round to whole dollars, you must round all amounts. Just drop under 50 cents and increase amounts from 50 to 99 cents to the next dollar. So that's good to know. Okay, so line 1, wages, salaries, and tips. We're going to enter the total of our wages, salaries, tips, etc. If a joint return, we're going to include our spouse's income. For most people, the amount to enter on this line should be shown in box 1 of their Form W-2. But the following types of income also must be included in the total on line 1. All wages received as a household employee, meaning if you worked at cleaning houses for someone or babysitting or something like that, but didn't get a W-2, you would still have to include that on there. Let's see, any Medicaid waiver payments, tip income you didn't report to your employer, dependent care benefits, which would be shown in box 10 of Form W-2, employer provided adoption benefits, scholarship and fellowship grants not reported on Form W-2, and also enter SCH in the amount on the dotted line next to line 1. Excess elective deferrals, none of this really applies to us. Disability, pension, corrective distributions from a retirement plan, wages from Form 8919, line 6, missing or incorrect Form W-2. None of that really applies to us except for the amount of wages we receive. So let's go and look at Form W or our Form W-2 here. And you'll notice in box 1 for Philip, and I'm going to pull out my calculator here so we can do the math. You'll notice that he made $45,432.33 in the tax year 2019. And don't forget, we have to add Mary. So if we go look at her W-2, she made $23,150.11. And if I total those, it comes out to their household total was $68,582.44. But we're just going to list it as $68,582 because we're going to round. So $68,582. Now, I go over here, line 2 has a 2A and a 2B, so I have to look at this. Line 2A, tax-exempt interest. Do they have any tax-exempt interest? If you received any tax-exempt interest, including any tax-exempt original issue discount, such as from municipal bonds, each payer should send you a Form 1099 INT or a Form 1099 OID. Do we have any Form 1099 INTs in our tax documents? By golly, we do. here is a 1099 INT right there. So we have to add this amount on line 2A, which is $333.98. But again, since we're rounding, we're just going to make that $334. So we'll go back here, and on 2A, tax exempt interest, $334. Oops, wrong. Okay, so was that in box 8? That's what the instructions say to look in box 8. So we'll go back here. We look in box 8, 4, 5, 7, 8. Whoops, we made a mistake. No tax exempt interest there. So we're going to take that off of line 2A. Don't need to include that. All right. So it doesn't look like we have any tax exempt interest. No interest earned on IRAs or health savings account or anything like that. What about taxable interest? And that's where we're going to look at the 1099 INT, and we're going to fill in that $334 on line 2B. So let's go over to 2B, and we'll put 334. Okay, qualified dividends. A dividend is when you own stock in a company and they make profit and they share that profit with their stockholders. I didn't see anywhere that the McDonald's owned any stock, so I'm not going to worry about qualified dividends or ordinary dividends. IRA distributions. IRAs are individual retirement accounts. After age 59 and a half, they're required to start dispersing income that you've earned from interest to you, and that interest would be taxable for a traditional IRA. We'll get into all that in the next unit, but I didn't see anything about any IRAs. No pensions or annuities, no Social Security benefits that I see. Capital gain or loss. A capital gain is one where you make money on an investment. It's not earned income, it's unearned income. And I didn't see anything about the McDonald's having any capital gains. Any other income, I didn't see any other income in their tax documents. And then line 7B, you're going to add lines 1, 2B, 3B, 4B, 4B, 5B, 6, and 7A, and this is your total income. Well, good news, we only have those two things to add, so we're going to add $66,582 plus $334 to get $66,916. And that is now our total income. Adjustments to income from Schedule 1, line 22. What the heck is that? Schedule 1. A schedule is a tax form that you have to attach if you meet certain criteria. Are we going to have to meet the criteria? Well, let's look at the instructions for line 8A and C. 5A, 5B. Here we go. 7B. 8A, report any adjustments to income on Schedule 1, lines 10 to 21. Enter the amount from Schedule 1, line 22 on line 8A. Boy, that wasn't very helpful. What is Schedule 1? How do I do it? Good news. You go to the IRS website, and you're going to search 1040 and Schedules 1 to 3. Look, I don't even have to search it. It's right down there in that box. I click there, and here's all the stuff. If you have additional income such as unemployment compensation, prize or award money, gambling winnings, having any deductions to claim such as a student loan interest deduction, self-employment tax, educator expenses, then you would use Schedule 1. Do the McDonald's have any of that? Well, if I go back and look at their tax forms here, do I see anything that is like that? So there's W-2s. Here's a 1098 mortgage interest. I don't remember them saying mortgage. Here's 1098E student loan interest. Okay, well, now that sounds like something they were asking for. So let's look again. Student loan interest deduction. Yes, so they have that. So we have to do the Schedule 1. So we're going to go out here. We're going to click Schedule 1 PDF. And the name shown on the 1040 or names. So we're going to put Philip J. and Mary D. McDonald. And Philip's Social Security number, when they say your, they're talking about the first person on the tax return. So go back out here and get Philip's Social Security numbers 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, at any time during 2019, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency like Bitcoin? Is what they're talking about. And I didn't see any of that in our information, so we're going to say no. All right, taxable refunds, credits, or offsets of state and local income taxes. Didn't see anything about that, so we're going to leave that blank. Whenever it's zero, you're free to just leave it blank unless it says otherwise. Alimony received. Alimony is from a divorce settlement to support the former spouse, and so I don't see any alimony. It doesn't look like they're divorced. We don't have to worry about the date of the divorce. Business income or loss. I didn't see any information about a business he owns. Other gains or losses. Didn't see anything. Rental, real estate, royalties, partnerships, S corp, trusts, etc. Didn't see anything. Farm income, doesn't see anything. Unemployment compensation, didn't see anything. Other income, didn't see anything. So we combine lines 1 through 8, and we're going to enter here on Form 1040. Line 7A, number 9 is 0. So if we go out to line 7A on the form, we've already done that. Hey, 7A is 0. So now let's go back to the form, the schedule 1, and fill out the bottom of it. Educator expenses, neither one of them were teachers, so they don't have to worry about that. Certain business expenses or reservists, performing artists, fee basis government officials, didn't see anything on there. Health savings account deduction, I didn't see anything on there. Moving expenses for members of the armed forces, didn't see that they were that. Deductible part of self-employment tax, didn't see any of that. Self-employed, SEP, simple and qualified retirement plans, didn't see that. Self-employed health insurance deduction, penalty on early withdrawal of savings, alimony paid, IRA deduction, student loan interest deduction. Now we're to something that actually matters to us. So we go out and we're going to look at those 1098 INTs, or I'm sorry, the 1098Es, and we're going to have to add, because there's 2 of them. There's one for him and there's one for Mary. So we add these up. The interest received by the lender in box 1, $235.98 plus $316.22, and that equals $552.20. So on the schedule 1, on line 20, we are going to list $552. Tuition and fees, no, they weren't paying any of those. Their kids aren't old enough to be in school. We didn't see any evidence that they're in school. And then we add lines 20 through 21, 552, and these are our adjustments to income. So we're going to enter that here and on Form 1040, line 8A. So if we go back to the form, we go to line 8A, that's where we're going to enter $552. B, subtract line A from line 7B. So 66,916 minus 552 equals 66,364. And this is our adjusted gross income, what they also call the AGI, adjusted gross income. So now we get down to line 9, and it says standard deduction or itemized deductions. And I already told you the McDonald's aren't itemizing to take things off their taxes. They're not making a list of things. So they're just going to use what's called the standard deduction. And the standard deduction, using some complex mathematical formula, is just an amount of money that they say right off the top. If you have dependents, or even just to take care of yourself, here's how much money you can deduct from your income to lessen the amount that you're taxed on. And if you notice to the left of line 9, there's a box there, and it says standard deduction for single or married filing separately is $12,200. Married filing jointly or qualifying widower is $24,400. Head of household, $18,350. And if you checked any box under standard deduction, see instructions. So we did not check any of those boxes up there above the children's names in standard deduction. So we're just going to take the deduction for married filing jointly, which is $24,400. So on line 9 here, standard deduction, $24,400. Line 10, qualified business income deduction. We didn't have any business income deduction. So now we're going to add lines 9 and 10 on line 11A, which is pretty easy. 24,400 plus 0, still 24,400. And then if we subtract line 11A from line 8B, so we're going to take that 66,364 and subtract $24,400, and that gives us $41,964. Whoops, wrong box there. So 41,964. And that is our taxable income. That is the 41,964 is how much money we earned that actually is taxable. Everything else we've worked through on this worksheet so far is stuff we can deduct from our taxable income. And when we have to go pay taxes, that 41,000 is what it's going to be based on. Now, this isn't over. There's a whole other backside to this, but in the interest of time, I'm going to stop here. We'll cover the first half of the backside or maybe more tomorrow. And then on Thursday, we'll finish up our return here. And hopefully, like I said, it's very individualized. It's very difficult to teach. You know, here's how you do taxes, and it be the way you do taxes forever. All I'm really showing you is, okay, here's how you find the instructions. Here's what you need to consider, things like that in general about your taxes. And hopefully this is good information for you. Did any of you guys have any questions? Okay, then we will pick this up tomorrow at 4 and continue finishing our tax return. I hope you guys have a great day. I hope you enjoyed today. It was really nice out. It was a little chillier than I thought it would be, but the sun was out and everything, so a good day to get out. I'll talk to you guys tomorrow. Have a good day.